welcome to The Trade. Before we get to the charts, time to take a quick look at what traders are watching. US stocks ending a volatile session higher on Thursday. Investors digesting a stack of earnings reports, upbeat comments from Tesla as well, helping to offset a disappointing forecast from Microsoft. Investors also responding to the sell-off earlier this week triggered by concerns regarding the Chinese artificial intelligence startup by buying a wide array of tech stocks. Traders growing more confident that the ECB will deliver 3 more rate cuts this year following their rate reduction, and we saw safe haven demand grow amid these concerns over Donald Trump's tariff plans, which hoisted gold prices to a record, once again bringing the key $3,000 threshold into investors' radars, and oil prices edging higher, held in check by threatened US tariffs on Canadian and Mexican crude imports that could take effect this weekend. Let's get into the technicals now. We've got a double header. We've got our good friend Peter Maguire from XM joining us, and also Clive Lambert from FuturesTechs joining us from London. Great to have you both with us. So we'll start with the S&P 500, and I'll start with you, Clive, in terms of what you're seeing with the technicals, because we do keep breaching these records, even if there is somewhat of a pullback. A lot of uncertainty out there, but still this market seems to have some bullish momentum.
Yeah, I mean, an uptrend, classic technical analysis, uptrend is a series of high highs and high lows. That's what we're getting. And it's not really any different to that. The chart I've actually brought in for us to look at today is an interesting one. It's the S&P futures, but the day session only when US stocks are actually open. So it strips out all the overnight trade. What that means is you get price gaps. You get markets opening significantly higher or significantly lower than yesterday's.
When the day trade is closed.
Yeah. So, and what that does is create these price gaps, which can be extremely excellent points to enter or exit trades and get involved in the market, because they really do stick quite nicely. The sell-off we had towards the end of December hit one of those price gap points, and we just bounced from there. Monday's sell-off. We've got this big overnight move on Monday, and then by the time day session trade had kicked in, the S&P futures were back above 6,000, and it's been a fairly quiet, sort of normal kind of week since. After everything that happened on Monday morning, when the US guys, they were still asleep. You guys had the chance to trade this.
Well, yeah, we were actually closed for one of those days.
Well, that's right. Actually, it was Monday, wasn't it?
You got the day off.
Yes, which I'm sure you didn't, Pete. But what does that show you? Because we know these shocks are going to come. Why is there such momentum like that?
A couple of things, Juliet. One of the things is that, as Clive mentioned, that's a day trade. That's a day chart. But there's a large proportion of movement that we're noticing when the market is officially closed, but the futures market is open. So the day session, that comes to an end, and then in that period of time, then the session is closed, but the market is still open from the futures side, you see large price point moves. So big corporates are buying, large investors are dumping stock, whatever, or news coming out from the Trump administration or economic talks. These all impact market movements, and that really is where the traders, I think, can take advantage of still getting into a market at the right possible point.
All right, let's move on to oil. I mean, prices, as I mentioned, overnight sort of held in check. Threatened tariffs coming on Canada and Mexico from as early as this weekend. What does this chart show you, Clive?
Well, this chart says to me that we tried to break out to the upside, breaking that downtrend line a few weeks ago, and it kind of failed, basically. And then we pulled back into this choppy range we've been in for a while, 65 to 80 on WTI. So that's what we're still. That's the environment we're still in. It's still choppy, but in a reasonably wide range. There's trading opportunities within that. But I think I think if anything, we're going to go back to that 65 area, because we tried to go higher and found sellers and failed to build on that momentum, how that fits in with the...
Well, very much so. I think if you're looking at, as far as the Trump administration, and President Trump has said he wants to see lower energy prices. So that really is driving, I think, prices lower. And he's also said, does he need Canadian crude? What's happening as far as Mexican crude? And he wants to increase his drilling as far as from a production standpoint. So I think the overall downtrend and softness across the energy sector is very much embedded over the next couple of quarters.
one thing that chart does say is that the sort of 62 to 65 area is absolutely massive support. It's really big, and so it's going to be tough to push below there. But if we do, then we could see it back to sort of the 20s again or something stupid like that.
Wow.
Yeah, it's a huge area of support, and it's continued to be so for a long time.
Sure.
So.
All right, gold hitting records again. I mean, it just seems to be continuing to rise, and there's so many reasons behind this. But in terms of what the technicals show you, Clive, does it get, or when does it get to, I guess, 3,000, and how much further does it go?
3,000 actually doesn't matter.
Okay.
It's just a round number, but it's a round number that obviously lots of people will be focusing on. What we saw in the last 2 or 3 weeks is a break above that sort of consolidation that happened over the course of the end of last year. That's a very bullish sign, and sure enough, yes, as we speak today, recent days, we're making new all-time highs for gold. I've got a target up at 3,250, I think, which is far more important than 3,000. I mean, I couldn't come on a thing like this in Australia and not talk about gold, could I?
Sure.
Absolutely.
Well, especially in Aussie dollars, it's at all-time high, and the central bank buying has just been enormous. Retail sector is very much embedded to the gold market, and I think the overall trend is going to be higher again over the next couple of quarters. What that number is going to represent, it could be 3,250, who knows? Could be 3,500, but certainly has got a hell of a lot of momentum that is, I think, picking up pace since January 1.
Yeah. All right. And Bitcoin, the digital gold. I mean, Fed fears fading somewhat about what they're going to do in terms of the momentum next from the Fed, but Bitcoin holding around 105,000 US. What do you see in terms of this continued? It's almost like a FOMO trade, right?
It is a bit. There was actually, we're almost on the cusp of a big sell signal on that about 2 weeks ago. 91,000 was a really important level, and there's that, where that orange line is on the chart was the low on the day where we sort of broke 91,000, went down to 88, and then immediately snapped back really quickly, almost averting that sell signal in 1 day. And that's when you avert a sell signal, you almost create a buy signal. It's like, well, it's not going down then, it's got to go up.
Yeah.
And it's been doing that ever since. I have had 108,000 as a long-held target, and that's pretty much where we've found this selling in the last few things. If and when we get above that, my next long-held target, 144,000.
Wow. All right, Pete.
How can you not be in it? Because what we've seen since the early part of November has been mind-blowing, from 67 up to about 108, 109, Juliet. It's hard to be short at the moment, isn't it?
Yeah.
I mean, really, anyone sitting here is just saying the market's open 24/7, and everyone from young kids all the way through to grandparents are a part of this whole market. So I think it's going to only gain more momentum as the rest of the year rolls on, certainly again with the Trump administration and their talks.
All right.
But really, you've got we've shown 4 charts. Oil was the only one that wasn't sort of a bottom left to top right chart.
Yes.
Yeah, they're the best markets to be in. They're the best things to be long of. They're the best things to trade to the long side and to stay in if you can, and just enjoy the ride kind of thing, And oil's the only one that isn't really doing that right now.
Sure.
Fascinating conversation. Thank you so much. Great to have you with us from London as well. Clive Lambert from FuturesTechs, and of course Peter Maguire from XM joining us. That does it for this edition of The Trade. Be sure to join us next time.